Lorine Pendleton, welcome to the All Together show. Thank you for being here.
Thank you, Eric, for having me.
Oh, really my pleasure. I've been looking forward to this. I'm just going to go back a short period of time, starting at Brown and then New York Law School, and now you're a VC. And that says something about a person. But before we really get into who you are and what you're doing today, I'd love it if you would share with us, in your own words, who Laureen Pendleton is.
Great. That's a great question. So first of all, I guess, I'm a daughter of two parents who, came from nothing but did well. And so they really framed me and shaped me as a person. And, just generally someone who wants to give back to my community. That's really important. And leaving a legacy and leaving, hopefully changing the world a little bit, making it a little bit better from when, I entered it. So yeah, just definitely leaving a legacy and helping others.
So that's a great segue actually into where I'd love to start, because you have written and said talent is equally distributed, but opportunity is not. One of the, I guess, relevant ways that I might alter that slightly for the way I think about Alto is that intelligence is equally distributed, but access to investment opportunities are not. Um, I'd love it if you would share with us what you mean when you say that talent is equally distributed and opportunity is not.
Great question. Yeah, I mean, I think it's pretty self-explanatory. I think that, I think if you look at whether it's a woman or, a person of color, whether someone lives in the United States or they live in Africa or they live in Europe, I think, there are people who are incredibly talented regardless of where you come from. But unfortunately, being talented isn't the only thing. And I'm looking through the lens of, VC and entrepreneurship. So there's an issue of access. If you're an entrepreneur, if you're a woman, a person of color, it's really difficult to get funding for your company. And so that's where I say the opportunity is not. And so for some people, opportunity because of who they are, they were, I call it the lottery of birth. They were born into a family that may have money, or the parents are corporate, work in corporate America, and they've been able to kind of guide them and they've had exposure. So it's just kind of the lottery of birth. And so for some people, like say, a young kid who is growing up in Harlem, maybe they're not great schools, they're not in a good neighborhood. It's going to be a lot harder for that person, but that person can be incredibly talented, have a great idea, but yet because of the lottery of birth, unfortunately, they may not have the opportunities that others people have. And so that's what I mean by that statement.
I think the lottery of birth is a much kinder, gentler way of saying the lucky sperm club. It's
Yeah.
I may or may not borrow that in the future.
You can go for it.
So
Yeah.
so so let's go back to the beginning. Where were you born? Who are your parents? What did they do?
So I was born in Harlem at Columbia Presbyterian Hospital, which is, actually technically considered Washington Heights, but Upper Manhattan. And I was born there. And then my parents, took me home and to our 2-bedroom apartment in Harlem. And I was there until I was 10 years old. We stayed in Harlem. My parents are both from Harlem. Pretty much I grew up, one parent household, very humble beginnings, pretty much poor. But my dad and my mom understood the value of education and as a way to get out of where they were. And so, at a very young age, my parents got married at 18. They had my older brother. My dad worked at the Brooklyn Navy Yard. And, by day and at night, he went to City College. Which he says was the Harvard for the poor at the time, really great school. Colin Powell went there. A number of well-known people went there. And, it was a free education. And, he went at night and he worked during the day and he was raising his family, ended up getting his degree in engineering undergrad. And then he went and got his master's from NYU. But then he got into corporate America. He worked at IBM. So he left the Brooklyn Navy Yard and joined IBM. And, that was, he was a computer engineer there. And then he went on to work at Exxon, which is out Exxon Mobil, but at the time it was Exxon. So he worked in corporate America, and, not too, shabby for a young boy who grew up in Harlem with absolutely nothing. He told the story of, basically his mom can only afford one pair of shoes every year for he and his two brothers. If he got holes in them, he had to cut cardboard in them and then put them in. And so, that's what he grew up with. Like, just his mom was a chambermaid, didn't make a lot of money. So, pretty much poor. But he understood the value of education. This is before computers and the internet. He would go to the library after school and stay there for a couple of hours reading books. And so he was just, really focused on getting out of that circumstance. And a lot of his friends who were like his, vintage years, they got into drugs and, they didn't make it, but he did.
So your dad was clearly a special man and had a significant influence on you and um, what you've now done in your life to date. Do you ever think about how your life may be different if it weren't for him and sort of exactly what his influence was on you?
Yeah, I mean, I think about that a lot. I think I appreciate it now as I'm older,
As we all
when I
do.
was, yeah, when I was younger, he would say things or would make me do things, and I didn't really appreciate it. And I'm like, ah, here you go again, my dad. And I'll give you an example. One of the things that stuck with me for a very long time is that when I was young, he would bring magazines home from Exxon, and one of them was Time magazine, and he would make me read it cover to cover. And Time came out, once a week, and I would have to sit down and talk to him about like the issue, like what was in the magazine, and we would talk. And I would always wait until last minute because I would go out and play with my friends after school. But we had a schedule. He said we had to talk about it. And I remember we sit at the dining room table and he's like, okay, what did you learn? What are some of the stories you learned? And I like hated doing it initially, but then actually grew to really enjoy it. First of all, it was like time to spend with my dad. And then also it just opened up this world to me. I was like, this is when we were still in Harlem, which is mainly, at the time, predominantly Black. I didn't have exposure to other cultures, other people, except for in my neighborhood. And that just really opened up my eyes to the world. And so to this day, I love to travel. I've traveled all throughout the world. And I think that was because of it. And I remember my parents had their 50th wedding anniversary 10 years ago. And I told the story and he started crying. He completely forgot that he did that. But, those things that as a parent that you do, you don't even realize it, but they have a lasting impact on your child.
So I think you and I are about the same age, but you look 20 years younger than I do. So I'm guessing you grew up in Harlem in the 70s, maybe?
Yeah, I
What
did. Yep.
what do you remember about that time? What was special about that time in Harlem?
You know, wow. One thing I have vivid memories of riding my bike, learning how to ride my bike with my dad in front of our building. So we lived in like a co-op apartment, and just it was in the city. It was like also the summers, like people were out and the kids are out, and they would open up the fire hydrant because it's like a hot summer day, and um like those kind of memories of being a child. And it was a happy time period. It wasn't, Harlem became pretty rough, and that's why my parents left. But I just enjoyed it. Like I had fond memories. I didn't feel, I had both my parents. They were great parents. Just they would, I took lessons, piano lessons at Harlem School of the Arts, which still is around. It's really great. We had a pool in our complex, so I would go swimming, just like, and hanging out with my friends, like, just my friends who lived in our building. But I do remember walking to school, and this is when crack had just entered Harlem. and there was like someone who was on crack, and I had never seen like this erratic behavior, and I was scared. My mother's like, don't look, just keep walking. And then, it just got worse. And that's when my parents, luckily, they were able to leave, and they bought a house in northern New Jersey, Teaneck. So literally without traffic, 10 minutes from where we were. But it was in New Jersey, and that was a different kind of community, suburbs, and just all kinds of people. Like my neighbors next door were Jewish. We had a biracial black and white couple. We had a number of Jewish neighbors, a Chinese Chinese family. Their kids, they were born in China. They were raising their kids who were first generation. So that was my block, and such a difference from when I grew up in Harlem. But it was really great. At first, I didn't want to leave, but I'm really glad that they, moved us, because I think then it even opened up more of exposure to me. And growing up in the suburbs, I think was great. Could play outside, so, I have good memories of childhood, for sure.
So I want to talk about the burbs in a second, but I don't want to leave
Okay.
Harlem just
Yeah.
yet for two
Hmm.
reasons. One, I happen to know that you had siblings.
Yes.
How many?
Two. So I have two. My older brother passed away 3 years ago.
Sorry.
Yeah, thank you. So he was great. He was a lawyer, and he actually went throughout. He grew up entirely in Harlem. So he had the experience of, he grew up in Harlem. When we left, my parents had moved to New Jersey, but he left to go to college. So I really, I had kind of this bifurcated living in Harlem and then moving to the suburbs. And my younger brother, it's so funny, when we were taking my older brother to college, my younger brother was an infant. So my parents had this big gap. And so my younger brother entirely grew up in New Jersey.
So I also know you're a foodie.
Yes, yes.
Was there a part of the childhood food experience in Harlem that influenced your likes and dislikes, and if so, do you still see that today?
I don't really, the food, like growing up, food wasn't, I mean, there was actually the food experiences that I had weren't necessarily in Harlem. I remember we had an uncle who lived in southern Jersey and just outside of Philadelphia. And we would go down, and they would have like a barrel of crabs, and they would like make them with Old Bay and beer.
Of
And they were
course.
just really great cooks. And I just remember like the crabs, and I would love to go down when they would do these summer like barbecues, and we would go. My parents are big foodies, I mean, we would have food, but I think my love for food, started in college.
Well, it's
And then
definitely a
I,
different time in the 70s, right? Like restaurants weren't what they are today. I just didn't know if maybe community wise, whether it was Harlem or in the burbs, which I'll ask about
well,
in a
yeah,
second.
I mean, there were some great soul food restaurants that we would go to like on occasion. And, just when you think of like, the typical soul food cuisine, there was great restaurants like that. But really my appreciation for food really started in college, and then from there it just really kind of blossomed. But
They
yeah,
had good
but
food. They had good food at Brown.
well, and I went to Providence, Rhode Island, which what is it, the number two culinary school, Johnson and Wales, is based in Providence,
Oh,
Rhode
I had no
Island.
idea.
So a lot of people who go there end up opening up restaurants. So I got a credit card, when I was going to college, and I would go like once a week. My friends and we would go to like a restaurant in Providence. We go to Federal Hill, which is very Italian. We get Italian food, or we go to a seafood place. And so we would go out. I mean, we were poor college students, but I would just use my credit card, and like that's when I like really got into food. Yeah.
That's cool. So I went to school in Amherst, Massachusetts,
Uh-huh.
and
Yeah.
UMass had a big uh, hospitality.
Oh, I
I,
didn't know
I
that.
I I think both the undergrad and masters, and so similarly, a lot of people would come out and start restaurants, and
Hmm. Yeah.
so Amherst had some surprisingly good food as well. Uh, so you moved to the burbs.
Yep.
Like
The
the
burbs.
classroom has to look different.
Absolutely.
What's that like?
So it was good. I mean, first of all, when I was still back in Harlem, one of the things is, I was always, I was excelling as a student always. And some of the kids would tease me and, make fun of me. That was in Harlem, right? And they're like, "Oh, you're a goody two shoe," and I wasn't trying to be. I was just like, I'm
You
smart,
just were
and
smart.
yeah, and so that wasn't the case in TNAC. That was not the case at all. The classroom definitely looked different. TNAC has a big Jewish population, so there was a lot of Jewish kids, which I had never met until. I mean, maybe I've met Jewish people, but I didn't. Probably didn't. So that was, that was interesting. And then also, just TNAC actually, a fun fact about TNAC was one of the first public schools to voluntarily desegregate. And so TNAC is a very, bedroom community outside of New York. A lot of people commute and go to the city, work. But it was a really positive community. And just a diverse community. And so I really embraced that. And I got to meet all kinds of people, fellow students. And then I played sports, which is,
What did you play?
So I ran track and I
Okay.
played basketball. So yeah. So winter and spring, I was heavily in sports, but it was great. It was a really good.
Did you both run and play at Brown as well?
No, I didn't do any sports.
Oh, Lorine.
Yeah. I didn't, I like people got recruited. I could have like probably tried to join, walk on, but I was just focused on my academics really. But it was a great, one of the fond memories I have, particularly running track, you have these like meets, they're like hours, like 7 hours, right? And
Yeah.
I ran the 400-meter hurdles, which was the first event. And so I would do the first event, bang it out, and then I would just be in the stands like studying. So yeah, but then sometimes they would pull me in and say, "We need you for the 400-meter relay, where you pass the baton." And that's like one of the last events. So I hated that because it's like, well, now I gotta, I could study, but I'm thinking about the event. And but sometimes they would pull me in if someone got hurt or just they weren't running well or whatever.
So, do you know what you want to do when you go to Brown? I mean, I'll tell the audience you go to law school, but is that the goal when you enter undergrad?
I wanted to actually I started out engineering. I wanted to be an engineer, and I was in engineering for the first semester and then realized that this is not what I want to do. So I changed actually. So it was interesting. The engineering program, we had to do, it was like physics, different, it was just one engineering class. It was a mixture of a lot of different things for the first semester. But part of it was like a programming. We had to do like write programs, which is kind of odd. But and that's where I really excelled because I actually learned how to code when I was 13. My dad bought. It was one of the first IBM personal computers with the floppy disk.
Well, he worked at IBM.
Right. Yep. So he brought home the computer. I learned how to program BASIC. I took computer courses. And so I knew how to program. And then so I ended up switching.
I learned BASIC on the Commodore 64. But
I used the Commodore 64, but then IBM came out with their personal computer. I remember it was like a big deal. It was like this massive computer now. It's so funny. And so I decided I wanted to switch majors to economics and computer science. And so after my first semester, I switched. Yeah.
So not that you weren't the most popular kid in the neighborhood before, but when you got that IBM, did people want to come over and like check it out? And
yeah, they did. Yeah. I remember it was really cool, and I think it was expensive back then. I mean, now
it was definitely expensive back then.
But I remember it. But I loved it. It was great, and I would, I excelled at that. So, which was good.
In junior high, one of the first things my friends and I. So my mom was always, my mom was an early adopter.
Okay.
Of all kinds of stuff. And so she bought the Commodore 64. And I remember one of the first things we figured out how to do, me and my friends, was to print something more than once. and I say that because we had this 7th grade English teacher who made us do like, 150 vocab words a week, and you had to do like 2 or 3 sentences with each word. And so they would just come over and we would type them up. Everybody would come up with a sentence, and then we just print it out 3 times. And we
Right.
thought that
Was
was
that the
great.
dot matrix printers? The dot matrix, those
Yeah, dot
like,
matrix printer. Yeah. I
yeah.
mean, it printed like a page every 6 minutes.
Right.
Uh,
It's so funny. Young kids, they don't know the struggles that we had to go through. Now they have a cell phone. They're walking around with like a computer, a mini computer in their hands, right? And yeah,
I mean, a computer more powerful than those first computers we had in their
absolutely.
hands.
Right?
I
Yeah.
I agree with you. Oh my God. Yeah. So okay, so um you decide engineering's not it, but I think you still end up minoring like in computer science or
I
something,
did.
right?
I was like 2 classes short of a CS degree. So, and then that year it was
You're such an
me.
underachiever, by the way.
Yeah, no, it was, yeah, I mean, I kind of kicked myself for not like completing it, but and it was only two women. It was myself and another friend, Lisa, who actually went on to go work at Adobe or Macromedia before it was Adobe. And then she was one of the launch team. She launched Hulu. She created Hulu,
Wow.
NBC. Yeah, so she actually stayed with computer science, and she ended up, pursuing that as a career and has done some really remarkable things. She was like the CTO under the Department of Education in the Obama administration. So yeah, and now she has a startup. So
So you're gonna
yeah.
have to ask her if she ever met James Runcie,
Oh, okay. I'm sure.
who was also I think he was COO for um, Department of Education for
I'm sure
Obama.
they probably know
I'm
each
probably
other.
messing that
Yeah.
up, but maybe. Um, so at some point you decide. Do you take a break between Brown and law school? What happens there?
Yeah. So ended up when I got out, I completely didn't do anything focused on computer economics or computer science. I actually joined a record label, Capitol Record, Blue Note, their jazz label. And it was actually through a Brown alum. He was working there full time. I interned. We would get like 5 or 6 week break in between semesters, winter and fall and winter. And so there was a job opening. I graduated. I got the job. I was making hardly any money. I was living with my parents because I wasn't making a lot of money. It was kind of like laughable how much money I was making. And so I was working there. It was great. We were, big jazz artists, and I would go to the shows, like the jazz clubs when our artists were touring. It was just a really great experience. And at the time, the president of the label, he was from CBS Records, now Sony Music. He was a very well-known executive, and he was running Blue Note Records. And so I knew I wanted to go to grad school, either business school or law school. So I asked him, I said, Bruce, should I go to business school or law school? He was kind of mentoring me. He said, do you want to have a career in entertainment? I said, yes. He said, so go to law school. It's the best business degree you can get for this industry. And so, which is true. A lot of people in entertainment
Yep.
or lawyers or former lawyers. And so I ended up going to law school. I didn't want to go full time because I felt like it would be really hard to get back into entertainment. It's hard to get those jobs. And so I went evening at New York Law and went evening. So I'd work, full day. And then from 6 to, pretty much 10 o'clock every night, Monday through Thursday in law school. I did that for 4 years and then graduated. And then I joined an entertainment boutique law firm, which was a great experience.
And so you had a really famous client when you were at
Hmm.
this boutique law firm. Tell us about
Yeah.
that. Tell us about that early experience.
So I joined a firm. Londo McMillan was the founder of the firm. He was a pretty young lawyer, and he's African American. And he created his own law firm. He worked at big law firms, and they didn't make him partner. And he had brought in Prince as a client. They didn't make him partner. So he left with Prince to launch his own law firm. And he went to Prince and said, if I launch a law firm, will you come with me? And he said, yes. So that's not too shabby for a first client,
Not a
right?
bad way to start.
Yeah. So we ended up, Prince, Shaka Khan, Stevie Wonder. We represented also Rough Riders, which was a record label that signed DMX, Eve, and then also Swiss Beats was also he was part of their production. They had a production arm. So Swiss Beats was a producer. I mean, he was young when we worked with him. Now he's very big and well known and married to Alicia Keys. But, he was like 18 years old and he was writing songs for Jay-Z and DMX and, making, per track, making quite a bit of money. But this young kid, and it's great to see like where he is now.
So you have either said or written publicly that you wish you never left entertainment law. I mean, like it's not like you've been kicked to the curb here, but
Right.
why do you say that? What is it or was it about entertainment law that was so special? And then why did you leave?
It's for a long time I said wonder what things would have been had I stayed in it. And then I looked at like Londell has gone on. He's now he owns a Source magazine. He bought that. He doesn't practice as much. He has a handful of clients that he works with and he's been more of a business person. And, I look at what he's accomplished and I don't know where I would have ended up. I guess that question mark. And then, just it's exciting. It's cool to like work with celebrities and, artists. But in some ways, actually, I don't really have regrets. I think my life has come full circle in a way. And, when I think about like venture, that's kind of like everyone's looking at venture. A lot of people look at it and it's interesting. It's a hot area. You have people who are celebrities who are getting into venture like Nas, he's actually been very successful in his, venture fund and investing. He was an investor in Coinbase. So you have a lot of Jay-Z is investing. So it's kind of interesting. These artists have diversified in terms of like how they make their money, and going into
Athletes
business.
too.
Athletes, absolutely.
Let's not forget
Athletes.
the locker room.
Yes. Kevin Durant. I know someone works for his company. Athletes are doing a lot of different things. So
Andre
it's some,
Iguodala.
yeah, no, I mean, so in some
Yeah.
ways it's kind of similar. Um, you know, but yeah, I mean, I just wonder where what would have happened, but I have no regret. I don't have any regrets really.
So
Um,
let's talk about the transition. At what point does angel investing and venture become interesting? Because what we do at Alto is help knock down some barriers and open
yes,
doors and enable access to opportunities that most people haven't gotten up until now. So
right.
when does that start? When does that hit your radar? And what's sort of that flash moment which says, I got to do this?
So I'll take a little step back and then kind of tell you how I took the leap into angel investing and investing. So, after practicing law, I saw the internet was like kind of coming out and it was like becoming massive. So I took a leap of faith. I joined a startup, an Israeli company actually, and they were licensing the technology. I tell people that was my first lesson in product market fit. We had a great product, but the market, we were too ahead of the curve.
What company
Um,
was it?
it was called it was called MindEcho. So basically personalization technology. This was like in early 2000. So now you watch Netflix, Amazon, you can like rate. Well, now they don't do it so much rating, but they would ask like if you see a piece of content, how do you like it? And from there would recommend content to you. Um, Now, I mean, people use that recommendation. You go on Amazon. If you bought this, you'll probably like this. It's all built into a lot of these things. So they were doing that in the early 2000s. Um, anyway, long story short, we got funding from GE Ventures. We had to unwind the company. We weren't able to sell what we were doing we were just too ahead of our time. I joined another company that was one of the first social media companies, Community Connect. We had Black Planet, Asian Avenue, Mahente. It was targeting the ethnic market. It was like Facebook, but for the ethnic market. And it was before the ethnic market. I'm sorry, Facebook existed. It was the first social media company to get to 1 million registered users.
Wow.
And that company was sold. And then I joined another company called Select Minds, which was more a B2B software SaaS play. And that company sold to Oracle. So I'll say is I've been an operator, worked at companies, helped build them. So I understood that space, went back to law firm world, but doing business development at big global law firms. So the biggest law firms in the world, I worked at business development, working with partners to help bring in clients and all of that. So 8 years ago, I was home watching, I'm like doing whatever chores around the house, and I had the TV on in the background, and it was like Soledad O'Brien did this documentary or this feature on Black in America, and she was talking to a group of Black entrepreneurs who are part of an accelerator program, and she said that only less than 1% of VC dollars goes to Black founders. And I was like, literally, I remember I just like stopped in my tracks. It's like, what? That's crazy. I didn't know that stat. I worked at 3 startups. We were all venture-backed companies, which was important for our growth. And I just said, that's just so abysmal and that's horrible. And, why is that? And I want to change that. Okay, so I said, I want to change that. And, okay, how am I going to change that? I've never worked in finance or VC. And then 3 weeks later, I was getting this newsletter called Daily Worth it was at the time, it no longer exists, but a daily newsletter focused on women and investing and just about finance. And in there, they interviewed this woman, Natalia, who was the founder of Pipeline Angels. And I'd never heard of Pipeline Angels. And she said she created Pipeline Angels to get women, it's a boot camp to get women involved in angel investing, to learn about angel investing, so that more women would get funding. And just as bad as it was for Black entrepreneurs, it's equally slightly better for women founders, but not much.
They're both bad.
Right, exactly. So it's like degrees of like bad, right? But they're both bad, right? And so I said, wow, this is so great. I like remembered, I Soledad O'Brien, that show, and I'm going to apply this program. And I applied, I interviewed, I got in. And so I was in a cohort of 10 other women. And as part of the program, we learn about due diligence, just how do you value a company? And then part of it is also learning, but also putting into practice. And we had a kind of a demo day, a pitch day. We selected out of 100 companies, 10 to pitch to us. We narrowed down to 3 companies. We did due diligence, and then we made an investment in one company together. Each of us wrote a check out, but together we invested.
One company out of 100 that you started with, right?
Yes.
I want everyone to hear that, because not every company opportunity you see is a good one.
Exactly. Yeah. But it was great because we got to, and each of us in the due diligence process, like, I'm a lawyer. I'm also in business development. We had someone who was also a lawyer, but she was like actually 2 people were like former newscasters. So, and then we had someone who worked at PwC and headed up like their IP practice. And so all of us had different skill set. And so, so the journalists, we said, okay, you're good at journalism. We're doing the due diligence, interview the references for the founders. And so each of us took a role. So it was just really, we learned with each other. It was great. And, got out, made our first investment. And then from there, I started making investments. Then I realized very quickly that this could be very expensive because, you need to make 20 to 30 investments in order to have a return, because most of your investments aren't going to do well, right? And so at some point, I mean, you're writing out a check for 10,000 or 25,000 a clip, it adds up. And then so one of the women in my cohort told me about Portfolio, which had just launched. And she was launching it. She was part of it with their very first fund. And she's like, Lorine, you can invest like Portfolio. You invest in the fund. They're going to make 8 to 10 investments in different companies. So you're diversifying your risk. And I thought, oh, that's like a mutual fund, but for like private equity or VC. And so, but you can listen to the pitches. You can be a part of due diligence team if you want. So I made an investment and just loved the model, made another investment in another fund, their B2B, software fund. And just really loved what they were doing. Got to know the founder, Trish Costello. And, I was thinking, I'm making these like investments, one check at a time. This is going to take a long time. I want to have a bigger impact. And so at that point, I was only investing in women and diverse companies. And so got to know Trish. And I said, I really want to start a diversity fund. She's like, why don't you do it with Portfolio? And so that's what I did in 2019. And then kind of the rest is history.
So tell us about the history then. I love that story, by the way. So you start Portfolio DEI, and walk us through the process of starting the fund, raising the fund, and the investments you've made to date. And I know I'm throwing a lot. I'll try
No,
and
no, it's
remember
okay.
everything that
Yeah.
I've asked as we get there. But then also the difference between putting money to work in 2019-20 versus putting money to work today.
Okay. Yeah, so let me just tell you a little bit I mean, I know you're familiar with Portfolio, but for your listeners, so Portfolio basically, Trish Costello launched Portfolio about 6 or 7 years ago, really to solve two problems: to get activate capital of women, accredited investors. She felt like, if you look at VC, most of the money that goes to startups are not, women led or diverse led. And so a group of people, white men, are making the investment decisions. And again, this opportunity conversation that we started out, not certain founders aren't getting opportunities. So she said, women are, going, a massive shift of wealth is going to happen to women. Women are going to get a massive shift of wealth by the end of this decade. But a lot of women don't invest in early stage companies and don't know about it. So she wants to get them to learn about it. It's easily accessible. Minimum check size is 10,000, which is accessible, and get them investing in this asset class. And then also providing a way to launch emerging managers, to run funds. So each of the fund has 4 to 5 partners. So we have 5 partners total. It's our diversity fund, Rising America. We have 2 funds, Fund 1 and Fund 2. We launched in 2019, in October 2019. Really excited. Within a very quick time, we raised $1 million. Each of the funds is up to 10 million, just the structure of them. That's what they are. So we're like, we're doing good. We made our first investment in a fintech company, and then COVID hit. So literally, like, for everyone, it's like slam on the brakes, like, everything comes to a standstill. And, we're just kind of thinking, okay, what's going to happen with COVID? We don't know what's going to happen. Then we started, like, the world was coming back alive a little bit. And so in April, we're like, okay, May, we can start looking at, reaching out to people and start fundraising. It won't look tacky if we start reaching out to people now, because, the shock of it all was like kind of wearing off a little bit. And then George Floyd happened, which actually gave us tremendous tailwinds because, obviously that was a, racial reckoning from a social justice standpoint. But also, I think people started looking at the economic disparity, wealth disparity in this country, particularly for African Americans and people of color. And so then there was this interest in, we need to start funding, founders of color, because entrepreneurship is the quickest way or easiest way to narrow that wealth disparity. Not the
Right.
easiest, but like the quickest way, right? And so then suddenly, I'm on Yahoo Finance. I'm like, on different things and being interviewed. And then suddenly people want to invest in our fund, which was great. And, we raised our fund and we started making investments and everything was great. And it was just really, really interesting. So we made our last investment out of Fund 1, September of 2021. So, not too long ago. And then we immediately launched our second fund, and just off the momentum of our first fund. And same team, same thesis. So the thesis is investing in companies where at least one founder is a person of color or LGBTQ, or, products and services that cater to those markets or have an impact on those markets. So it could be a founder that's not a person of color, but they have, they have a product or service that is impacting, will benefit people of color or LGBTQ communities.
Can you take us through the team's decision-making process? What does due diligence look like? And are there certain themes or characteristics that you've identified where pretty early on you think that this is something you're going to get to yes on versus something that is going to be a no?
Yeah. So I think, so the whole process, through our network and then people reaching out, we get potential companies to look at investment opportunities. So usually one of us or 2 of us will have an initial conversation with the founder, learn about the company. And if we think it's something, at that point, it's like a litmus test. Do we think this is something that would be of interest to our other partners, something that we should be investing in? If so, we invite them to pitch. We do one monthly pitch once a month. the interesting thing about Portfolio is we invite our limited partners, our investors. They actually get to come and see the pitches, which is not the case of most venture funds. So they get to see us in action where, the entrepreneur is presenting, we ask questions. We even put up a poll just to take their pulse. Is this something that we should move forward in due diligence, or should we just not at this time, or maybe, keep them on the radar, look at them in a few months? That doesn't necessarily impact what we decide, but it's just really for them to feel part of it. And then also we say, hey, if you have domain expertise, you want to be part of our due diligence team, join us. And they'll participate in due diligence, which is really great. And that's what I did when I invested in the first and second fund. And so the process in terms of due diligence, what we look for, we look at, there's a saying in venture, bet on the jockey, not the horse, meaning you really want to invest in really great founders. Definitely the idea is important. What they're doing is really important. But most times companies have to pivot. If you think of Amazon, they first launched as like selling books, and now look at Amazon, right? That's an extreme example, but a lot of companies pivot. And so it's really important. You have to think, is this founder, do they have the resilience? Are they coachable? Are they the type of founder that will, they're going to get a lot of no's, but they're going to continue doing what they're doing and not be dissuaded? Do they have domain expertise? Do they know about this industry? If they don't, do they have a good board, or have they surrounded themselves around people who can help them? They know what they know. They know what they don't know, right? And that's really important. What's the problem that they're solving? Is it a very big problem? What's the solution? Their product and service. Is it cheaper? Is it better than what already exists? It's very rare that you'll find a company where there's no other competitors. And that's okay if you have competitors, just like you're doing something different.
Right.
Financial model, business model, how are they going to make money? At the end of the day, they have to make money. So how are they pricing their product? So those are the things that we look at. Do they have IP? Do they have a defensible moat? Is it going to be easy for people to, as they're getting traction, to jump in and do what they're doing? So those are all the things that we look at.
So I'm trying to figure out how to ask this one. Do you have a favorite investment that you made? I know. You're like, I always say, by the way, my favorite one is the last one I made, but you can't. So, but you're not allowed to use that line.
Okay.
So it's also okay to say, yeah, I really don't want to offend anybody.
No, it's kind of like having children, right? Like, you don't want to say, right, this is my favorite child. What I can say is I'm proud, and I like every single investment we've made. Each of us brings deals and we lead them. So I haven't led every single deal, but, of course I like the ones that I've led and I've brought in. But I think all of the companies equally are really interesting, and I like them all. There's some that, kind of stand out a bit. And like one that we invested in recently called Rares is a fintech. It's basically, they buy rare collectible sneakers and turn them into assets, in terms of shares, and they sell them as shares. So I like that. I like that company a lot.
We like cultural asset platforms.
Right. Yep. But we have a really great company, Canela Media, which is a streaming service for the Latino market, which I like a lot. It's just killing it, doing really well. It's a great company, great founder. But, those are just a couple of them. We have another fintech, Mochify, which is a digital bank for the under and unbanked. I like that company as well.
Nice. All right. So you're also the New York chair of Tiger 21.
Mm-hmm.
What is Tiger 21?
Yeah, no, it's a really interesting organization. So when I decided to launch a VC fund, I left my law firm. I couldn't do both, right? And so Tiger it was like serendipity, because Tiger reached out to me. I'd never heard of Tiger 21. It's a peer group for ultra high net worth individuals. So Vistage is a similar kind of organization. EO, which is for entrepreneurs. So basically, peer groups where people get together. Vistage is more around, CEOs and people of companies and leadership. What we say about Tiger is you're in the stay rich business now. Our members have had liquidity events. A lot of them are entrepreneurs, had exits, and they didn't come from money. A lot of them, most of them didn't come from money. So now they suddenly are thrusted with like a lot of money. And so how do you get around with your peers? No one has any, give you unbiased feedback, help you avoid blind spots. They don't have a vested interest. They're not like your financial advisor where they're profiting from you. You can learn from, other people. So we focus on family dynamics. How do you raise kids, or deal with family members who may ask you for money all the time? Legacy, philanthropy, what is your legacy with your philanthropic things that you're involved in? Investment deal flow. We look at deals, people bring investment ideas, they'll form due diligence team within each other. So it's really around that. It's been wonderful for me. I've learned it's like every meeting is a masterclass. So I facilitate the meetings. I have two groups. They meet once a month. I bring in great speakers. We have, a number of events. We did our big global, exchange, which is a global meeting we had last month. I got to be on the big stage interviewing, someone who's a contributor on CNBC. Tom Lee is one of the top equity strategists in the country. So we look about things around markets, trends. We had an expert on AI. We talked about cryptocurrency. So just really, it's think of it as like an area where you talk about investing, but also the challenges and issues around money and people who have a lot of money. But then we also talk about health and all kinds of things that, people are concerned about.
Has mental health been a big issue over the last kind of 18 months?
We're actually having an event next week. We do these things called Tiger Talks, where we have experts come in, and our members, by the way, we have over 1,100 members globally around the world. And wow. With actually COVID, we started doing these things, Tiger Talks. We brought in doctors and experts, around COVID, but then also mental health. We're doing something next week. And yes, absolutely. Mental health has been a discussion. We acknowledge that mental health is, for some members, kids, for people they know, friends, family, for themselves. I think, mental health is impacting all of us in some way.
I agree. So in connection with kind of Tiger and portfolio, you also had an association with and played a role with the Angel Capital Association. Mm-hmm. Can you just tell the listeners what the ACA is and what recommendations, if any, you have if people are trying to figure out how do I get started in angel investing? What should I be thinking about? Where do I go? What are the resources?
Yeah. So I was on the board of the ACA, Angel Capital Association, until last year. I stepped down just because just was busy with my fund and other things. But it's a really great organization. It has 14,000 members, individual angel investors, as well as like family offices and investment groups. Really the oldest like kind of association focused on angel investing. So there's different things, education is a big thing. So if you're new to angel investing or interested in angel investing, you could become a member, and it's a very accessible. I think it's like $250 to become a member as an individual. And there's tons of, every month, several webinars where you can learn about, how do you perform due diligence on a company? They did something on cryptocurrency, Web 3.0. What are some of the investment opportunities? So it could be around sectors, or it could be just like the skills of building, to be a good investor. They have an annual summit. The annual summit is going to be in mid-May in Atlantic City this year. It's going to be in person. They haven't had one in person in over 2 years. So I'm excited to go to that. It's just a really great networking. We typically will have about 1,000 attendees, pre-COVID. Great networking, great panels, speakers. They actually also have, do a cocktail reception for women Women angel investors, that's always a good turnout. And for the past several years, it's gotten bigger and bigger, which I'm happy to see more women are becoming angel investors and more people of color. But it's a really, if you're interested in angel investing or new to angel investing, it's a great resource to become part of it, become a part of a community. Also, they have a lobbying arm. They have a lobbying firm where, looking at going before Congress and politicians to say, one of the things is looking at taxes for people who invest. Also looked at, just kind of the accredited investors when, looking at changing that. That happened recently. So just really, to get in front of and educate our lawmakers on the importance of angel investing and how they can support angel investing. And by the way, VC is big, but angel investors actually, when a company's starting out, they really drive the economy because, VCs won't typically invest in companies as they're just starting out, but angel investors will. And so, in pre-seed, pre-revenue, or just kind of just launching it to seed stage. And so, they really fuel the economy and angel investors are really important.
So you're definitely walking in the shoes that you've set out. And you're representative of the change you've wanted to see, which is just amazing. I like to end with your last meal. What? And I already mentioned that you're a foodie. So what would the last meal be, and who are the chefs?
I have this conversation a lot.
Well, I want to know if it's changed since you told me what it would be.
No, not really. So I love sushi. So I would need to have, it would be a couple of things, like kind of my favorite food. So sushi would definitely be on the menu. Morimoto, the chef, would be great. I would love to have him cook, or not cook it, but prepare the sushi. I love crabs. I think it's a nod to one of those summers when I would go down and see my uncle, and he would do the crabs in the barrel and bushel crabs, and so I love crabs. That would definitely be on the menu. Like those are the two things. I'm thinking what else. I'm not a big dessert person. I do love like chocolate fudge brownie. Ben and Jerry's is like my favorite, so I would have that. And then
you mentioned Bobby Flay.
Oh, Bobby Flay. Yes. I think he's a great chef.
Was there a specific dish from him that?
Well, I kind of one of my signature dishes that I like to cook. He does this recipe for porterhouse steak. He does it the way that Peter Luger, which is a well-known steakhouse in New York City and Brooklyn. If you Google his Bon Appetit, he has a recipe. And so I started doing a porterhouse steak the way he does it. And it's such a great method. And so I would love for him to, do a porterhouse steak for me. Or just he's just such a great chef. And Tiger, we actually had him speak at, an event, and he did a cooking demonstration, and he's a great businessman, obviously celebrity chef, but yeah, I love, I've been at a number of his restaurants. I think he's a great chef.
I'm willing to bet $1 that after this podcast is over, you're going to the store and buying a porterhouse and making one for dinner.
Yeah, dude, I'm telling you, check out the Bobby Flay Bon Appetit. It's recipe. It's amazing.
So, Laureen, thank you for joining us and sharing your time. And it really was an honor to have you on the show. Thank you again.
Thank you for having me, and continue doing what you're doing. It's so important. I remember we met the first time at the ACA, a conference.
We did.
I think it was in San Diego, or it was in Southern California.
It was in San Diego.
Yeah.
That's right. It's been a lot's happened for you and for me.
I know your company's grown. So congrats on all your growth.
Thank you so much. We'll talk to you soon.
Okay.
The Altogether Show is brought to you by Alto. Alto knows that achieving true portfolio diversification means investing in more than just stocks and bonds. That's why Alto developed a streamlined platform to make it easy and cost-effective to invest tax-advantaged retirement savings in alternatives, assets like real estate, venture capital, and crypto that are outside of the public markets and available through Alto's growing list of investment partners. To learn more, visit altoira.com/altogether.